Greetings, finance enthusiasts. Welcome back to the New Way Finance Academy. Today we're taking a deep look into the world of Gold IRA rollovers. Now you might be wondering, what is a Gold IRA rollover? Well, it's a financial strategy that allows you to convert a portion or all of your existing traditional or Roth IRA into a Gold IRA. This is a fantastic way to diversify your retirement portfolio, especially considering the ever-fluctuating economy. It's a method that's growing in popularity, and for good reason. It's a smart move for those seeking stability in these unpredictable times. If you're enjoying our content, remember to like this video, subscribe to New Way Finance Academy, and turn on notifications to stay updated with our latest videos. So you're probably wondering, what exactly is a Gold IRA rollover? Well, let's break it down. An individual retirement account, or IRA, is a type of savings account that offers tax advantages for retirement savings in the United States. A Gold IRA is a specific type of IRA that allows you to invest in physical gold, along with other precious metals. Now, a Gold IRA rollover is a process that allows you to transfer funds from your traditional or Roth IRA into a Gold IRA. This can be a smart move for those who want to protect their retirement savings from potential economic downturns or inflation, as the value of gold often moves inversely to the stock market. So how does a Gold IRA rollover work? It's quite straightforward. You open a self-directed IRA with a custodian who offers gold investments. Then you transfer funds from your existing IRA into this new account. Once the funds are transferred, you can use those funds to buy physical gold, which your custodian will store on your behalf in a secure vault. There are several benefits to a Gold IRA rollover. First, it allows you to diversify your investment portfolio, which can reduce risk. Second, gold has proven to be a reliable store of value over time, providing a hedge against inflation and currency fluctuations. Finally, any growth in the value of your gold investment is tax-deferred until you take a distribution, just like with a traditional IRA. However, keep in mind that a Gold IRA rollover is not for everyone. The process can be complex, and there are strict IRS rules about the type of gold you can invest in and how it must be stored. Plus, unlike stocks and bonds, gold does not produce dividends or interest. Simply put, a Gold IRA rollover allows you to diversify your retirement portfolio with physical gold. So if you're looking for a way to safeguard your retirement savings while potentially profiting from the enduring value of gold, a Gold IRA rollover might just be the golden opportunity you've been searching for. Now that we understand what a Gold IRA rollover is, let's discuss how to initiate one. Starting a Gold IRA rollover involves several key steps. First and foremost, you'll need to establish a self-directed IRA through a qualified custodian. These custodians are financial institutions that hold your IRA's assets and take care of all the paperwork involved. It's crucial to choose a custodian that not only has a strong reputation, but also has experience with Gold IRA rollovers. You'll come across a variety of options, but make sure you do your homework to select the best fit for your needs. Once you've established your self-directed IRA, the next step is to fund it. You can do this by making a transfer or rollover from an existing retirement account. A transfer occurs when the funds move directly from one custodian to another. You won't see the money, and there's no limit on how often you can do this. On the other hand, a rollover happens when the funds are sent to you, and you then deposit them into the self-directed IRA within 60 days. You're limited to one rollover per year. After your self-directed IRA is funded, the fun begins. You can start purchasing gold, but not just any gold. The Internal Revenue Service, or IRS, has strict rules about the types of gold that can be included in a Gold IRA. The gold must be at least 99.5% pure and must be in the form of approved bars or coins. Some examples are the American Gold Eagle coins and the Canadian Gold Maple Leaf coins. Finally, your custodian will store the gold in a secure depository until you decide to sell it or take a distribution. This ensures that your gold is safe and your IRA remains in compliance with IRS rules. Remember, the key to a successful Gold IRA rollover is choosing a reputable custodian and understanding the rules and regulations set by the IRS. It's a process that requires careful planning and consideration, but with the right knowledge and guidance, you can turn your retirement savings into a golden opportunity. Like any financial decision, a Gold IRA rollover has its pros and cons. Let's begin with the advantages. First, the tax benefits. A Gold IRA rollover allows you to transfer funds from your traditional IRA or 401k into a Gold IRA. This process is tax-free, as long as you follow the rules set by the IRS. This means you can potentially save a substantial amount of money on taxes, which you can then invest in precious metals. Secondly, diversification. In the world of finance, it's never a good idea to put all your eggs in one basket. With a Gold IRA rollover, you can diversify your retirement portfolio by adding a tangible asset gold. This can provide a safety net, as gold often moves inversely to paper assets, providing a hedge during market downturns. Lastly, a hedge against inflation. Gold has traditionally been viewed as a store of value, especially in times of economic uncertainty. As inflation erodes the purchasing power of paper currency, gold typically retains its value, potentially safeguarding your retirement funds. However, there are also some disadvantages to consider. First, the volatility of gold prices. While gold can be a hedge against inflation, its price can also be quite volatile. This means the value of your Gold IRA can fluctuate, and there's a risk you could lose money. Next, storage and insurance costs. Physical gold must be stored in a depository approved by the IRS, and there are fees associated with this. Additionally, your gold must be insured, which is another cost to consider. Lastly, unlike stocks or bonds, gold doesn't pay dividends or interest. Your return on investment comes solely from the hope that the price of gold will increase over time. Understanding these pros and cons can help you make an informed decision about whether a Gold IRA rollover is right for you. It's crucial to do your homework and consult with a financial advisor before making any major financial decisions. After all, it's your future we're talking about. Let's now discuss some common mistakes to avoid when initiating a Gold IRA rollover. First on the list is choosing the wrong custodian. It's like picking a dance partner. You want someone who knows the steps and can lead when necessary. In the world of Gold IRA rollovers, your custodian is your dance partner. They're responsible for managing your account and ensuring that all transactions are conducted within the law. So be cautious. Don't just settle for the first custodian you find. Do your homework. Look for a company with a solid reputation, experienced staff, and a transparent fee structure. Next up, not understanding the rules and regulations. The world of finance is a labyrinth of laws, rules, and regulations, and Gold IRA rollovers are no exception. It's crucial to understand the IRS rules governing these transactions. For instance, did you know that you can only perform one tax-free rollover in any 12-month period, regardless of how many IRAs you have? Or that the IRS requires physical gold in an IRA to be stored in a depository? Ignorance isn't bliss when it comes to your finances. It can lead to penalties and tax troubles. So educate yourself or seek professional advice. Lastly, rushing the process. Just as Rome wasn't built in a day, a successful Gold IRA rollover isn't achieved overnight. It's a process that requires careful planning and patience. Rushing into it can lead to costly mistakes like missing a crucial deadline or failing to properly document the transaction. Slow and steady wins the race, especially when the race is preserving your wealth for retirement. In conclusion, a Gold IRA rollover is a significant financial decision. It's not something to be taken lightly or rushed into. By avoiding these common mistakes, choosing the wrong custodian, not understanding the rules, and rushing the process, you can ensure a smooth and successful transition of your retirement savings into gold. Avoiding these mistakes can save you a lot of time, money, and stress in the long run. Well, that wraps up our discussion on Gold IRA rollovers. We appreciate your time and hope you found the information valuable. If so, do us a favor and tap that like button. Don't forget to subscribe to New Way Finance Academy and hit that bell icon to stay updated. If you think this video could help others navigate the world of Gold IRA rollovers, don't hesitate to share it. Until next time, keep investing smart and stay tuned to New Way Finance Academy for more financial insights and advice.